Hey, welcome everybody to the 40 Finance channel. I'm moving some stuff around the office today, getting a little different setup here for 2022. So don't adjust your screen. I know the background looks a little bit different, but most importantly for today, we've got Apple earnings and we have Visa earnings. We had, I believe, MasterCard this morning, but this is honestly the first few minutes that I've sat down today working on this and a couple other errands that I had to run. So you're watching this reaction live with me, and I see, let me switch over here to SeekingAlpha newsfeed. I see Visa's in. I know more people are interested about Apple, so let me just see if they have some news on that. Not yet. All right, we could check some other sources here. See if Yahoo's got it. Not yet. Okay, so let's just take a quick look at Visa, which looks like it had a positive headline. All right, non-GAAP EPS, $1.81, beats by 11 cents, which is great. That means your PE is going down more so than projected. Revenue beats by 270. Shares are up 2.5%. Payments volume, what's going on, Derek? Payments volume for the 3 months ending December 31st increased 20% over the year on constant dollar basis. And then this one, cross-border volume excluding Europe, which drove our international transaction 51%. That's huge. So I'm just going to tell you, if you're not, haven't been following Visa, or you're wondering when they bounce back, this cross-border volume is big, and increasing 51% year over year is huge. Total cross-border volume, which would include Europe, increased 40%. So good news on the Visa front. I'll have to dig in and see what their guidance is. Usually, if you guys were watching, what's it called? What was the last big one? Microsoft. Microsoft didn't do their guidance until their actual earnings call, so whatever. I'm going to check this press release. It's a great thing, by the way. You guys know that I have that coupon for SeekingAlpha in the description. You can really hang out in SeekingAlpha because they chop this news up. They get rid of all the pictures. And like over here, you see this bullet point thing. You get that in your email when you're a premium member. So check out my affiliate link in the description. I do receive a commission. It's one of the ways that I support the channel. Let's see if we can scan this. Visa will host, Not a whole lot. I thought that there would be more depth to this, but they're really just calling out that that's what they're gonna do, so to speak. Let's check back over on Apple. Nothing yet. Nothing yet. We can try Apple Investor Relations. See if we can get something. I don't see any information except for the webcast, which is 5 p.m. Eastern time. So at least, as far as I can tell, there's not going to be any information until 5 o'clock. So anyway, we'll talk about some other stuff. Let's see who else had earnings, which is very easy to do in here once I figure out where to go. Latest news, here we go, earnings news. All right, we had Axos. I believe that is the police officer, defense, like body cameras and some other stuff. Looks like they beat, but revenue misses by $1 million. Canadian Pacific Railway, where is Lion? He's probably interested in this. Non-GAAP EPS misses by 2 cents. Seacoast Banking, who cares? How's the furniture business? Ethan Allen beats by 19. Revenue beats, so that's positive for retail in general, I would say. Boot Barn looks good. That's good for retail in general. There's Visa. I didn't look. Let's see what Robinhood did. Robinhood misses. Revenue misses. Not too bad. That's like 10%. I guess that is 10%. They probably, with Robinhood, it's all about looking forward. Let's see what we got for the first quarter. Robinhood anticipates net revenue will be less than $340 million. Whoa! Versus $438 million consensus. That's a killer. Derek Ridland starting to dabble, had to add Intel, FLWS, LRCX. I don't know those ones. Flows is at its lowest point in over a decade. Value plus buyout. And I think buyout is going to really help a lot of these stocks, and Apple is one of those. Visa is another that have enough money to pull out buyouts in 2022. So, of course, Apple's been doing it for a decade. And I imagine that that's going to continue. So we'll see how it goes. All right, so Robinhood, I would say that that was not good. What time did this come out? 4:02. And yeah, I don't know if you can see it with my fat face there, but 1160 at close, 1028 and falling fast. That one's going to get hurt tomorrow with that kind of report. All right, Chevron, that's a preview. Lending Club got their butt kicked too. I'm not in this one, but I do read a lot about them for some reason. Net income short of the estimate by, 15 some odd percent. Looks like they are going to get hit too. Dives 29%. There we go. All right. Robinhood, JetBlue, Lending Club. Who else we got? I didn't look at MasterCard. They were supposed to be in the morning, if I remember correctly. Let's see if we can get a headline out of that. Today is the 20th. There it is. Non-GAAP EPS at $2.35 beats by 14 cents. Their revenue also up, similar to Visa, plus 26%, but shares down. Who knows what they said. It does look like at the end of the day they inched up 1.72%. Their cross-border grew 53%. Strong fourth quarter. We are optimistic about the coming year. We are adding to our unique services. I didn't catch a guidance in that article. But good news for, I would say, big cap fintech, if there is such a thing. Good news for, Derek is 1-800-Flowers. Yes. Good time to get into that, probably with Valentine's Day and Mother's Day coming up. But, big cap tech or fintech, namely Visa, MasterCard, PayPal, and other people have been falling with it. It's been under pressure, and this was a huge earnings report for both MasterCard and Visa, and it's great to see that, cross-border, payment volume, all that stuff, even EPS is doing well. So I doubt... I don't want to jinx it, but anybody who bought Visa under 200, which was available recently, I think in January, or early January, I should say, I think that's a good play. I'm right in at 190 myself. That's more or less averaged over the pandemic when it was running much hotter, and hopefully this will spill over to my good friend PayPal, who is definitely sucking wind. Post-market, not really. Down minus 0.16. When is PayPal's? earnings. It is not like tomorrow or anything. Tuesday, right? 2/1/22, Tuesday. So hopefully we can get back in the upward trajectory for PayPal. You do see that they've had a lot of downward revisions that, that hurts your forward PEs and your forward revenue in sales. So that has changed. And that's been the big thing with projecting on PayPal is the baseline analysis has been going down over the last 90 days. So whatever you thought it was going to be, say 6-7 months ago, is almost had turned irrelevant, right? Because you chop, let's just say 50 cents off of the EPS, and then all of a sudden people pay less of a valuation because of what the stock market's doing. Then you throw in the fact that they pay less of a valuation because perhaps maybe you're not growing at the same pace that you were, and you get yourself a crap show, and that's exactly what we got right now with PayPal. So, but I have no intentions to sell at this. I'm so close to 100 shares, which took forever, and I will get there one way or another. All right, since Derek threw it on the board, let's take a look at 1-800-Flowers, right? FLWS. See what they got going on. Coming off of an earnings miss. So I'm sure, is that today? 127.22, that's today. So if Derek just started, you might have some opportunity in there to add even more. I don't know if they came in the morning. Maybe that's why you bought it, because they came in the morning. If they had an early call, we can probably find out right here. Oh yeah, 6:45 a.m. So you already knew this. Derek already knew this. Probably why he bought it today. The revenue miss was so they were plus year over year, which is of course good. But they just didn't hit expectations. But that's like what, 3% under, give or take, some napkin math. EPS misses. That's a healthy miss. But you always have to listen to what they say in the press conference to figure out, perhaps why this happened. Company revised full-year guidance, revenue growth of 7 to 9% versus 11%. So that's always going to hit you. Adjusted EBITDA in the range of 150 million, EPS in the range of $1. Yeah, so they basically just came out and told analysts they were all wrong on their consensus. So to Derek's point about it being the lowest PE in over a decade, let's see, outside of analysts. Well, we need somebody to project this stuff. Let's see what folks are thinking in the long haul for this one. I'm just going to go down to sales first. Yeah, I mean, you got strong single-digit growth that could easily, it's close enough that it could easily get to double digits. And I wouldn't trust anyone to project out to 2024. That's my opinion on it. And you got a PE under 10. Maybe not so much growth in the EPS this year, but getting back on track. Yeah, I mean, if this is 2+ years, maybe sooner, it does look pretty good. I did that whole freaking thing and I forgot to switch over. So I'm sorry. Let's see. I'm not going to do it again, but I am going to show you guys the earnings right there. So that was the news, and the stock went down 30% today. Derek picked it up. Good luck to him. All right. I'm going to check one more time for Apple. I can't believe they don't at least throw out a freaking press release, right, that says up or down. But anyway, I guess not. All right, so what else did we see in the market today? U.S. Steel comes out. There's a lot of people interested in this market in general, steel market, because obviously we do have big plans, whether it's Build Back Better or otherwise. It's suffice to say that construction and expansion are woefully behind with all of the COVID delays. So there's a lot of folks betting on steel, and it looks like the U.S. Steel, that was their dividend announcement. And okay, so they missed on their EPS by 20-ish%, but revenue plus 100% year over year looks pretty good. I don't know enough about the steel industry, but I'm guessing that any sort of inflationary pressure on the steel industry means that they can sell it for more. Steel is, basically a commodity in the sense that if you're building a building, you've got to have it. And when you buy it, probably depends on how much you pay. So if you're interested in steel, look at that. I would just say study that industry because it's not just a pop in and out kind of thing. Walgreens. Did Walgreens come out today? No, it looks like they might have just declared their dividend. Forward yield 3.82%. Let's see when they're... And I don't know when they're... Oh, there's their earnings report was farther back, so we don't need to worry about them. Anyone else notable? Western Digital, this one's kind of in the chip sector. Some people follow it. It's interesting to see how they do, only because they're going to have, be affected by chip shortages potentially. Non-GAAP EPS at $2.30, beats by 18 cents. Revenue plus 22%. Cloud revenue plus 89%. So that looks favorable for anyone, ideally that these would be similar results for people such as Google, Amazon, etc. Cash flow of $666 million, free cash flow of $400 million, completed debt refinancing, revenue to be in the range of $4.5 billion, non-GAAP EPS about $1.80. Looks like that resulted in minus 1.36. But Western Digital is an interesting company. It's kind of like a oddball AT&T in the sense that they have little different categories. They were best known for their portable storage, but they have a lot of other concepts as well. Excuse me. World Wrestling Entertainment declares 12-cent dividend. Look out. Lucid, EV stocks are losing their growth premium. So I guess the Tesla news must have shrank the whole EV industry a little bit. And, this channel does not do a ton of Tesla, but I think that the takeaway for me, just as somebody who follows it, I don't own any Tesla outside of ETFs, but I have said this before, that maybe particularly now, see how this is looking. Let me get an annual look here. 13, so if they hit 1023 this year, which sounds like, it's kind of hit or miss based on supply, 8105. Tesla, it just depends on how you want to view it. If you want to call it the tech company or if you want to frame it as an automobile maker. But you got to admit, fundamentally, this slide that it's on has brought it into, maybe reasonable territory. Certainly, if you're buying the 5-year story. So keep your eyes on that. I think the hard part will be whether or not you can ignore where the headlines are going to go, right? So they're going to talk about that their factories aren't running in capacity and chip shortages this, and You're not making a Cybertruck, you're making a robot. There's plenty of bear cases in there, but if you want to do 5 years, close your eyes, the fundamentals for the stock are going up. It's just hard to tell what the multiple on Tesla should be, in my opinion. Maxine, Apple hasn't released, unfortunately. They haven't even released a PR, a press release that says what they did, and I'm surprised by that. So everybody in the world has to wait for the 5 o'clock phone call or earnings call, however you want to look at it. No updates here. So yeah, you didn't miss it. Our old friend Eli is getting a little interesting. Another super low PE. And Topgolf, yeah, I liked the acquisition of Topgolf, and it is coming back down to reasonable levels. I'd have to read up again on this one and see how the Topgolf integration is going. But when this news first came out, man, if you go to Topgolf, which we have a one in Cincinnati, man, that place is always packed. It doesn't matter if you go at lunchtime or nighttime or what. Like, I take my little kids every blue moon just to, swat at some balls. But it's packed every time. So to Derek's point, maybe there's an opportunity to get in here. What I would just want to double check is if and when does Topgolf contribute to the bottom line? And it's hard to tell that by the current projections. And so, of course, when they release earnings, it'll be too late. But, hopefully they could get over $1 in some sort of EPS estimate. I just think it looks better. And then these numbers probably need to come up to single digits, which is good stuff. But, I just feel like they need to push it a little bit harder, and hopefully they will. You gotta figure that Topgolf, the attraction to it and the way people want to get out and about and whatever, I don't feel like that's going away. I can't imagine the golf game is projected to do worse than it has in the past. Oh, Lion's here. Lion, just for a shout out, I actually looked at a Canadian railroad company on the news ticker today. And I thought of you. They reported, and I forget what they did, but we were going through and I said your name. So think of Netflix for a second in 5 years. I'm with you on Netflix. Every time I say Netflix, people they kind of rattle my cage and say it's a dinosaur and whatever. I don't know why retail's not interested in it. It got smacked down to like media company levels, which I think, I can't say that that's not fair, but if you look at one thing most people don't know is that Netflix, 60%, I believe now, of the revenue comes from international. So this whole is US growing, digging deep into US subscribers, why? That's not the game. They're not on that game. They're charging people more in the US, which makes 100% sense to me. It's the next level. You're making the service more premium, charging people more. Not everyone can afford the luxury, but they'll dip in and out every time one of their favorite shows comes on. So I don't know. I'm with you, Lion, 100% with you. And the other thing that gets overlooked or gets pounded on in Netflix world is the amortization schedule of their expenses, because I think they run if they make a show, right? Let's just say they made the 40 Finance show. Whatever money they throw into it, they amortize it for 10 years or something. And people go back and forth that's BS and they're kicking the can. I understand why folks say that, but I will also say that how long has Seinfeld been around, right? Like, I don't think it's, how long has Star Wars been around and it's still printing money? Spider-Man, like the first one in 1999, that thing's still printing. And I get it, not everything that Netflix makes will print, but you do have to figure that if you made, I watched a series, The Witcher, for the first time. I liked it. It went, I think they have like 2 seasons, so I usually wait till, in case I like it, I can watch a whole bunch of them. And The Witcher is on season 2, which I watched. And when season 3 launches, hopefully that's a good series and more people come in. So throwing off, kicking the can on season 1 from a amortization standpoint gives a shit. We're already 3 years into The Witcher, right? On the next season. So I get kind of upset about that view, but I do understand. I'm not a jerk. I'll at least listen to the other side. I can understand why it might be off-putting, but I don't think too many people take into account the value of quality programming over time. I mean, whoever signed up, they probably didn't even have this yet, but can you imagine if you signed up for like 0.001% royalties on the original Star Wars, or 6 million movies just like it? Dude, that thing still sends you a check every year that's probably pretty solid. So I don't think that that's an issue. All right, Apple is out, says our friend Andrea, AAPL. Apple soars. Let's see what we got. 210 beats by 10%. Revenue plus 10% year over year. Don't forget this gigantic company. And they basically beat. So if you just do the simple math on this, they were basically calling for 5% and they got to 11%. Products revenue, blah, 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 blah. Let's see if we can get something about 2022. They raised their dividend, live streaming, whole bunch of BS. I don't see anything about talking about 2022, which they'll address on their call. But shout out to Andrea getting us in there for seeing that. I appreciate it. After hours is what we're looking at here. You're up 2.36%, which on a stock this big is big. You can't move this thing that just arbitrarily. So if we think about, let's think about FANG. We survived Microsoft, outstanding report. We survived Apple, outstanding report. We don't know their guidance yet. Microsoft guided right in line with expectations. Next week we get Amazon. I did not remember Google and Facebook. Let's see if I can get an earnings date for them. I'm assuming next week. Yeah, holy cow, 2-1. So Amazon and Google on Tuesday. Meta on Wednesday, if I have my dates right. Sorry, I'm just checking a calendar here. Yeah, Tuesday for Google, Amazon, Wednesday for Facebook. So the world, in my opinion, if the FANGs go across the board and as far as I'm concerned, Netflix hit the targets that were most important to me, we're golden. Amazon's an ass kicker. I feel like there's a lot of negativity around them right now for some reason. I still believe in them. I got only 3 shares, and I am really anxious to add the 4th underneath 3,000, which is there. I have to get some money, man. Those things aren't cheap. And it's very good for my side play, which is, of course, QQQ. If you land Apple, Microsoft, Facebook, Google, Amazon, you basically land the QQQ, okay? And then all you really got to worry about is where chips land. And at least we got the TSM earnings 2 weeks ago or so, and it didn't sound like they were slowing down anytime soon, and they make everybody else's shit. So I can't imagine NVIDIA, AMD, Intel reported they're a little different because they make their own. And I know there are some concerns. Intel, you're not worried about them today. You're worried. You're just like, the whole bull thing is 2 years from now. So I don't put a lot of grain of salt into what Intel's doing absolutely today. It's a long-term play. But AMD and NVIDIA are getting all their stuff made by TSM. We also know now, because Apple gets a lot of stuff made from them. That's their biggest client. We know that Apple sales are good. So, hey, this world is ending. I don't know. May not be there after all. And that's okay, because I'm mildly, I'm actually bullish on stock earnings as a general statement. I will say that I'm as nervous as everybody else about the background stories that can drag stuff down, right? We have the Ukraine, we have COVID, we have Olympics coming up. Hopefully nobody does something stupid about that. And obviously we have the Fed that just, I don't know what their problem is, that they can't spit out a decision. But I would say yesterday was disappointing in regards to the Fed press conference. I was disappointed. I thought it was kind of puss, to be real honest with you. I think the market can handle more, and we're getting babied. And I'm the kind of guy who is like, give me the bad news first, and let's dig in and knock this stuff out. But we didn't get that. All right. Richard Parker, Apple stock. Yes, up 2%. Twitter showing, okay, we got the Apple numbers. Apple long, yeah, Lion is, I can't imagine anyone would have sold if they went down 5%. I mean, you just hold it forever. You believe in it and you hold it. I actually don't use Apple products. My family does. So my wife and my kids have like iPhones, the older ones anyway. And I've always been, because I do a lot of stuff with e-commerce and internet marketing, so I've always been like a Google person and PC. It's just an easier way to navigate that world. But I don't hate Apple. They're just kind of like not in my world. But I'm the only one in my family. All right, Paul Watson. Anybody interested in ticker X, steel industry for the future? Paul, we did talk about steel for a brief second. I would say that there's a lot of interest in it. And the only thing I said out loud on the show was just, make sure you know what you're getting into with commodity stuff and how prices fluctuate. Obviously, with inflation / short supply, very, very similar to oil, it can be a huge boom time for steel. And that's what everything looks like. But the flip side of it is if steel would remain at today's prices, I'm not sure that you would see too much out of those stocks. I think similar to oil. My take on oil is the bull case is $100 a barrel. And do you believe that or not? I don't know enough about oil, but I believe the U.S. government would interfere with it getting to 100. That's just my take. So I'm out on that one. But I don't know. The market of oil is very, very complicated if you ever dig into it. And there's a reason that pros play oil trades. Derek can't get behind Netflix for the same reason he can't get behind Square or DraftKings. They have zero moat, and that's fair. I will say I agree to disagree on the moat behind Netflix, particularly when they are making the shows that they are, which I know often their shows get laughed at on social media. I think if you dig under there, there's some real gems that are worth climbing back to. But I get it. I get the fact that anyone can, theoretically make a streaming channel and charge for it. And same with DraftKings. I use that service and I enjoy it. I'm not in a huge hurry to run out and buy more DraftKings on this dip, but my long-term DraftKings, 3 to 5 years, I've said it 100 times, it's still there. And will it pan out? Don't know. I don't know. Nobody knows, right? But I know that absolutely for sure, DraftKings is going to bust open every can that they have available to win market share, and we'll see if they do. So it's sort of a side bet in some ways. To that note, if I don't want to misquote here, but I think it wasn't MGM, not MGM. Somebody else who owns a big stretch of hotels, like Vegas type places, just bailed on the mobile gambling mix. Let me see if I can find it. MGM. It's not MGM. I'm just using MGM to look at their news feed because they kind of like put all those people in together. Wynn Resorts. Wynn Resorts is trying to sell their online sports betting business at a big discount, and they basically said they can't compete, and they say competitors are spending too much to get customers, the economics aren't there, so that's their view. Wynn, I think traditionally is a profitable company with the EPS, although they don't have a PE right now. But so here we go. If you're on the bull side with me on DraftKings, I read that article. I'm like, here we go. People are already giving up. We didn't even get to 50% penetration in the United States, and people are already giving up. And this isn't me giving up. This is Wynn Resorts, aka Macau, aka Las Vegas. So I thought that was big. Now somebody's going to buy this, supposedly at a big discount, and don't be surprised if DraftKings runs the numbers, because they are blank check, and figure out how much each person's worth and buys it. We'll have to see. Big news, though. Oh, yeah, love The Witcher. So I don't know, I don't want to dedicate the show to The Witcher, but if you had any sort of like Lord of the Rings fandom in you, and I'm not talking about dressing up as the characters, but if you enjoyed watching Lord of the Rings, if you enjoyed any kind of like medieval fantasy type movie, The Witcher really kicks butt. And it's a much smaller story. I find that it's very easy to follow as opposed to like, Lord of the Rings has like a lot of worlds and shit that I'm sure I missed like half the meaning of those movies, but they were very cool visually. To answer Lion's question, at what point would you buy Netflix? So my Netflix exposure is third party. And embarrassingly enough, I bought it from my mom's account. And she's doing all right, though. She was like 400, I think. This was when Netflix tanked last time. But, it got to 6, and I didn't sell, and now we're probably kicking 400. I think this price is fine. I mean, and it's 5 years. I think it's a no-brainer. 386. I have to figure out if I need to go back in Mom's and maybe add a share just to bring the cost basis down. I'll have to think about it. But if money was not my concern right now, I think 386 is fair. I really do. And everybody projects the earnings. God damn it. I really wish they would do annual right off the bat. So here's December 22. So they're saying negative year-over-year growth in earnings. I'm not buying that for a second. 30% next year. So let's just say we get stuck in media valuation, which is terrible, which is Viacom, which is Discovery. It's like 10. It's like 10 to 15 on PE. Like it's an awful place to be. But let's just pretend that that's what happens. then you could argue that Netflix, sadly would probably have to lose another 50, 60 bucks before you could start to see the media valuation. I mean, these out years are way too far out. I don't believe that they deserve a media company valuation, though. I really don't. Not when EPS, this number will not transpire. I can almost guarantee that. They'll be plus to some degree this year. They will be plus next year at 30%. And you're in double digits on revenue. And the worldwide markets aren't even started yet. And as they told you, the stuff, God, I forgot to switch the screen, sorry. As they told you, this wasn't even their best quarter, right? As far as like content, so whatever. Largest single quarter ever for Apple. Google is about to go crazy. Yeah, I bet you. I mean, does anyone doubt that Google's going to have a great earnings? And that's got to be the most. I don't know where it is now. It was, geez, 2,500. If I wasn't such a, I don't see any reason not to buy QQQ instead of Google for myself. But because I've already started down that path, man, 2383. It's actually 2259. This single-digit year-over-year growth seems suspicious to me. 548. I think that's just like Netflix was. I forgot to switch the screen over. Netflix was in this kind of territory, and I'm not buying it. Double digits. It's like Apple. I mean, you just buy it, and hopefully Amazon will resume their way of being the same. This week is insane. TSM, how are they doing? Well, TSM got crushed, I think, with the rest of the semis going down, 116. Yeah, I'm not worried about them. Frankly, they could go to $99 and it'd be the least of my concerns for the long term. They've got so much business, and if people want to dick around and knock them off for a little bit, then that's fine. I mean, yeah, chips, forward PE of 21, you could say that historically that's higher, and I'll agree with you. First of all, though, I see no reason that this won't plus 10% up to $6, right? And then this will turn into $7. So that's just my thought. Don't forget, if you're having trouble doing your math on will TSM grow or not, we just got the Apple earnings. Who is their biggest customer? And once Apple does their little press conference, find out just how many phones are being sold and whatnot. Anything about forecast? Tesla was up 5%. I'm not sure what you mean. A forecast for Tesla for me, I talked about it for a second. I think that you're going to enter a period right now, which has already started, where people are trying to figure out what the valuation should be. Right now, you're at 80 on the PE, I believe, on forward PE. And it's just getting harder to constitute that number. And then the catch point, though, is like, do you go down to GM and Ford, which I don't agree with. But then you're down into like the teens. So that takes off a huge stretch. I don't think anybody does that. However, I do think that there's more room in this particular environment for them to go down, not because the company performs poorly, but just because the valuation multiple goes down like everything else has been going. All right, V is taking off. Nice, I didn't look. I needed that, boys and girls. I needed it. Yeah, 216. Definitely a portfolio booster for me. Now I need PayPal. roughly Amazon, and you don't even want to know where I'm at on QQQ. So I would take that one too. All right, let's hope Meta and PayPal hit earnings next week. Hell, even Baba. So Baba's next week. That's a huge one for the sake of all Chinese stocks across the world. 128, that's tomorrow. Is it? Is that real? Let's have to look it up. Do quarterly results. September. Not posted yet. Where are we at here? Let's just go to the home. Investor Relations home. November 18th unveils forecast. I don't know. I don't see anything that says, this just says estimated is the only reason I'm questioning 128. Let me just check Yahoo real quick. Oh, for fart's sake. Earnings date, yeah, interesting. So I'm not seeing, there's disparity on the Baba earnings date. It's supposed to be next week, according to Yahoo. SeekingAlpha had an estimate of tomorrow. I'm sure we would have heard about that by now. So you have to dig in. Derek Ridland should be able to tell us that because I know he's been buying. All right, if you have a $200,000 house and price it for $1 million, it's not a deal if the price is cut to 500. I don't want it at fair value. I want it for less. Yeah, and I think there's a point in there that I almost made a video on a couple of times, but I don't think people, the YouTube crowd doesn't care. But I agree. I'll say what you just said in a different way, and that is stocks are retreating to historically fair value in much of those industries, and we look at it every day on this channel. So to Derek's point, and if you can factor in that perhaps some of these earnings and revenue growths might be overstated and they start backing off, looking for a stock on sale is still not easy to find. It really isn't. So if anything, you would say some of these stocks are fairly valued, whereas formerly they weren't. And if you look at like NVIDIA, I don't know where they ended up today, could easily make an argument that they're still overvalued. Easily. I just did a video on it. And I think if I remember off the top of my head, I put like 185 on that thing. And it was based on a couple other valuation factors. So there's a lot to this. There's a lot to this. And finding something on sale is still not, it's not like everything's on sale. The market was super irrational yesterday. Papa Pow, he didn't say anything dramatic that would shift momentum. Yeah, I wish he would have picked a side. He just sits in the middle, right, and can't. I just want him to pick a side. I actually am immune to whatever happens in the market because I just feel like we're getting to that point where, you know, we got arguably fair valuation, stuff goes on sale, just like raise interest rates 0.25%, which is Zippo, and let's get going. And if we tank the market a little bit and flush out the people who probably shouldn't be in it anyway, then we're fine. Like, I don't know. I don't know why we can't get that through. I was very disappointed that that conference resulted in projecting ahead again. And so that was disappointing to me. Andrea calls out, CNBC says Baba is January 31st, which is Monday. So thanks. We'll just assume that that's correct. I couldn't find any information. Layla HLTH, not familiar. Q Health, don't know enough, and I don't do much in health and pharmaceuticals, so not a lot to say here. 13 cents earnings, you know, if I had to guess, you're probably right on par with 756 if that 13 cents is legit. SPY, why not? It's got to go up eventually, right? Doesn't mean it can't go down again. Aftermarket SPY plus 2%. And, you know, I think it's a great time to buy the SPY. Not all your money at one time, but I think pepper in some stuff in after a few of these positive earnings. I think it's a great time, you know, and just make sure that you always have, probably if you're starting brand new, you need 50% or more of your cash to keep buying down, because now we got to wait till March for interest rates, which coincidentally will also bring, well, not back to back, but we'll have to survive late April into May for the next earnings. So everyone's just on needles right now. Doesn't mean that things can't go up. And as Lion always says, somewhere out there, there's $50 gajillion on the sidelines. And some of it makes me think that people are just waiting for retailers to get out and be done with investing and turn their money over to their personal, what do you call it, financial advisor or whatever, and then they just buy the SPY, right? That shit's going to happen, absolutely, for sure. Somebody's going to, you know, not recognize, not understand the mistakes they made, because I made a ton of mistakes and I'm trying to understand them. But they're just going to give up, and they're going to either not invest at all, or they're going to go give money and pay 2% to somebody else who's basically going to buy the SPY, which is sad. Anyway. All right. Robinhood getting crushed. We looked at it, Lion, earlier. Robinhood, it was awful. There wasn't a silver lining in there. Every earning that beats, been buy the rumor, sell the news. Yeah. Just Dad's here. What's going on? I did not talk about AMD Armands, but I recently did a video, and I think because it's under 115 now. I mean, if it goes under 100 and you're buying for 3 to 5 years, I think you have to be pretty excited about that. I would be. I think I put a price target of 115 off the top of my head, and you're at 102, now up to 104. This PE, when's their earnings, first of all? Jesus, Tuesday. So that gives us Amazon, AMD, and Google on Tuesday. So look out. Should we even bother buying stocks until Wednesday of next week? But anyway, I mean, assuming that they keep chugging along, why not? They beat. They just keep beating. This forward PE of 38 is basically irrelevant, because it factors in the end of this fiscal year, which we're already done with. The key will be 2022. So your forward PE is 30 right now. It's not going to be exactly maybe historical average, but I don't know, man. It looks like bare minimum this one's a fair value. Even though we have seen companies pull back 70%, doesn't mean they're a deal. Totally, Derek, you're absolutely. Lion, Canadian truckers are fighting for our freedom. They're making some noise. Wow, I don't even know. U.S. still locked down. Are you guys still locked down? There's no lockdown in Ohio. No lockdown in Ohio. And if you go south, southern states don't give a hoot. There's nothing going on down there. So when you see the big headlines about like restaurants closing, and I've lost track of who does what, it's more than likely California and New York City. But I'm not even aware of a state that I know that has locked down and shut down anything. And I guarantee you, south of Ohio, very unlikely you'll find anyone who's even going to entertain that idea. All right. Synchrony Financial. I've looked at them before. I can tell you that I don't have a ton of interest, but let's try to get a feel for how things are going. This is debt, the debt side of credit cards, right? They also do partner cards and stuff. But even though I'm huge on Visa, like one of the things I like about Visa is they don't play in the debt market. And I believe Synchrony does. So looks like a little soft this year, but if you look ahead to next year, maybe plus 12% on revenue. And then something's going on here. This is soft and could really impact your fundamentals. So if you really go from 701 down to 565, then your PE goes up, and that could affect what people pay. So like the worst part is your if your forward PE is higher than your trailing PE, it doesn't look so good, and it probably doesn't look very good at all to the algorithms. So I would just say be patient and figure out when they're going to talk about it. But short term, I don't see anything here that says blowout. You know, that's just my take anyway. Looks like they're coming out tomorrow, which is why you're asking. Friday before market open. Now, on the bright side, maybe they blow it away. Could happen. I don't know enough about the company to speculate. Better not be any lockdowns when the Bengals get that W. Yes. Bengals 3:30 on Sunday. Should be a nail biter. I'm excited for them. I really am. Time in the market beats timing the markets. Commando. Haven't seen you in a while. Good to see you. And as usual, you are spot on. So when you're talking AMD and you're talking Apple and everything else that's around that size, I mean, what do we even care what they say at a certain point? The only reason I think that I care so much about Apple earnings as someone who doesn't own the stock directly is just because I know what it does to the market, and I know like what it means for consumer forecast. So anyway, that's why I spend time on it. Wish Florida had an underground railroad. Yeah, there is no rules down there, man. No rules. Home Depot got a new CEO. Wow. With that, guys, it's 5 o'clock and I got to roll. Thanks to everybody for coming out. Good to see you. And, you know, looks like we got another awesome week next week. Arguably awesome. We'll see what happens. So I'll be in the mix. You'll see me posted on the channel. But thanks, everyone, for your support. Have a great day, and we'll see you on the next video.